The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN. Hope you're having a great day wherever you are in the world. 877-927-6648. That's the number to use to give me a call. You can catch my show daily on TFNN from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. If you can't listen live, you can pick Breakout Investing up as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is plug those earbuds in, open your smartphone browser, type in tfnn.mobi, and you can listen to the stream crystal clear that way as well. And if you want to look at charts live right along with me, my daily reminder to check out Tiger TV on the homepage of TFNN.com. That is also viewable on your handheld device as well. Channel 1, the show is carried live. It is archived in Channel 13. All right, what do we have going on today? A pretty, solid day of accumulation for the major averages. The NASDAQ composite has been outperforming for the better part of the day, mostly due to strength in Apple. There have been some other nice movers in tech, which is encouraging. Right now, right now on the exchanges, you've got volume on the New York Stock Exchange and NASDAQ tracking higher than Monday. That's a good day. You always want to see volume expansion to the upside. If you can get that at least points to modest accumulation going on in the major averages. Last I checked, NASDAQ volume was tracking about 20% higher than what we saw Monday. Monday was very light at 1.5 billion shares. So we're seeing a little volume expansion today. On the New York Stock Exchange is tracking about 15 to 20% higher as well. Volume Monday on the NYSE was also very light at 590 million shares. Positive development for the NASDAQ composite today. As you can see, it is back above. It did gap up today at the open. It is back above its 50-day moving average. What is not good to see is that it's bleeding a little bit into the close here. Let's get a quick update. And we'll see that the NASDAQ composite is up 1%, close to a 30-point gain, trading right in the middle of its range after hitting an intraday high of 3,033. It is now trading around 3,017. So not a bad day by any means for the NASDAQ composite. We mentioned shares of Apple. Looks more like a dead cat bounce to me. I've been you could see Apple giving back a lot of its gains. Apple hit a high of 549 today. It is now trading about 10 points below that high, 539.84. Still up 1.9% on the day, but not much volume in the stock. So you still have a stock here that's under distribution. And when a stock is under distribution, what you tend to see is higher volume declines followed up by lower volume gains, especially over the past when Apple has fallen in 3 out of the past 5 sessions or so. There's been a pretty heavy volume behind the decline. So not much volume in the stock today, even when it was trading near its session highs. But Apple right now down near its session low, still up 1.9%. $10 gain to 539.84. So that's what's going on in Techland. Nice technical breakout today in Salesforce.com. This is has been a holding in for a while in the Ultimate Growth Stocks model portfolio. You can see a beautiful breakout here. Good volume expansion. Definitely looks like it's under accumulation. Like the fact that it's holding up near its high. Good strong breakout today, over $160 a share. So Salesforce.com, certainly one of the pioneers in cloud computing, and a company that has consistently been able to deliver excellent top-line growth in recent quarters. Been growing sales on a quarterly basis by a minimum of 30% for as far back as you can see. So Some good action in tech land today. S&P 500. Let's see what the benchmark index is up to. It is also trading off its highs, trading in the middle, maybe slightly below its bottom. Slightly below the midway point of its trading range today. S&P right now up a little more than 7 points, 0.5% gain to 1425.86. It is holding above its 50-day moving average here, and the Dow Jones Industrials will check in on this blue chip index, and we'll see that trading right in the middle of its range today, up about 68.5 points, 0.5% gain to 13,238. So, yeah, still a tricky market out there. It's a market. Listen, when a market is under meaningful accumulation and there are pretty clear signs that money is moving in from the sidelines, it makes it a little easier to go long stocks because the market's telling you that, hey, the market tide is flowing positive. I'm under accumulation. That's generally a good environment to make money. The big issue here is that we're still dealing with a market that is not under meaningful accumulation. That is the main problem as I see it. It doesn't mean that I'm not long stocks. I am long 5 names right now in the Ultimate Growth Stocks model portfolio. I'm also short a couple of names because this market is just a little bit tenuous to me. So it's just it's not an easy market. The gains are good to see today, but are we seeing technical breakouts in heavy volume left and right? Technical breakouts in heavy volume in spades today? No, we're not. And there are still some decent technical stocks out there, stocks that I thought would have moved by now that still aren't moving even after a day like today. So still getting some mixed signals from the market. We are in an uptrend. It's an uptrend that I'm still taking with a grain of salt. I'm embracing it as much as I can, but the bottom line, this is a market that is still not under meaningful accumulation. Will it be when a fiscal cliff deal is reached? That's positive, but if we keep melting up here in generally lackluster volume, a sell the news scenario wouldn't be surprising to see at all, even if we do get a deal before the end of the year. I heard some debate on that today. If we keep moving higher. And it has been a pretty strong rally since the November 16th lows. Some good news getting priced in pretty quickly here. If we do get a deal, does the market all of a sudden go back to this economy that, GDP growth still very questionable, what that's going to look like in 2013, questionable job market, how strong is the consumer going to be in 2013? It is interesting to look at the home builders today because on a day of decent percentage gains for the major averages, the home builders, to me, buying demand is completely drying up in this group, in case you haven't noticed. People on TV telling you to buy the home builders here. It's going to be a great year for the builders in 2013. They're going to be able to extend gains. That does not look to be the case right now. It could happen, but buying right now, I think there's risk for more downside as a lot of these home builders look like they're ready to base, pull back, consolidate gains for a while. You can see the iShares Dow Jones U.S. Home Construction Index Fund, ITB, is actually down now, only down 2 cents to 1990, but been underneath its 50-day moving average here for 5 straight days now. So we'll see if that eventually ends up being resistance. Some of the strong performers in the group, take a look at Ryland Group. Is it participating in the market? Nope, it's down 15 cents to 32.49, trading near its session low. Not showing great action at its 50-day moving average either. How about Pulte Group, PHM, another stock right at its 50-day moving average? Not clear that it's going to find support here. So to me, the home builders look like lower prices lie ahead in the group. It doesn't mean that they're not going to be able to eventually build bases and retest their prior highs, but buying demand has completely dried up in this group, which tells me that lower prices probably lie ahead. At this point, if you believe the home builders are going to be a place to be in 2013, you're going to need to see renewed signs of institutional buying in the group, and it is not happening, not in the least bit at this point. Bonds lower, yields higher today. Bonds lower, money moving into stocks. That has pushed yields higher. The 10-year note right now about 1.65%. 30-year bond at 2.84%. Dollar index lower by about 0.4% to 80.05. February gold down $4.80, 0.3% to settle at $1,709.60 an ounce, and January crude oil rose 23 cents, 0.3% gain there, settles at 85.79 a barrel. All right, AIG. Let's take a look at AIG. This is a headline stock today. At last check, AIG was up nicely, outperforming, and that is still the case. It's up 4.4% today to $34.82. The government agreed to sell its final position in the insurer for $7.2 billion. That's going to net taxpayers a $22.7 billion profit. I guess that means we all get a check, right? You keep hearing these, the taxpayers are getting a big windfall here. So what, all these checks are going to be mailed out and we're going to have some extra Christmas money to spend? Is that what that means? I'm not sure what that means. So it nets taxpayers a $22.7 billion profit. So the government agreed to sell 234.2 million shares for $32.50 in a public offering. Over the last year and a half or so, the government has sold almost 1.7 billion shares in 6 offerings for an average share price of $31.18. So today's news means that the government is completely out of AIG shares, benefiting as a result. Again, up 4.4% today to $34.82. Another headline stock today, not a name I follow closely, but Delta Airlines making a nice percentage gain today, up 5.5% to $10.70. Actually, a nice strong breakout over $10.50 a share. News here is they're taking a 49% stake in Virgin Atlantic for $360 million. I don't know that this deal was that surprising. I think it had been on the table for a while. Business travelers between the U.S. and the U.K. represent about $2 billion in annual revenue. That's according to Delta's CEO. So Delta wants a piece of that lucrative market. Seems to be a move that makes strategic sense for Delta, and investors like that news because Delta is up 5.5% today to $10.70. Urban Outfitters, another story stock. This nice turnaround going on in Urban Outfitters. Kind of an interesting store to shop in. I've been in Urban Outfitters several times in recent years. Nice turnaround going on at the specialty retailer. Last night it disclosed in a regulatory filing that same store sales in the fourth quarter are trending in the high single digits. That looks to be better than expected. Again, nice turnaround going on at Urban Outfitters with accelerating sales growth in recent quarters. Always like to see that. Stock gapped up on the news, up 5% now to $38.86, well off its session high. So decent day for Urban Outfitters, but there do look to be some sellers not only in the stock but also in the broad market. All right, folks, we'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. 877-927-6648. Don't forget about that Tiger Dollar promotion going on at TFNN.com. Purchase Tiger Dollars. We'll donate up to 10% of your purchase price to the Salvation Army for the holidays. Sign up by December 19th and get a 25% bonus match on any amount you purchase over $500. Tiger Dollars are a great deal because when you buy them, you can use them to save a lot of money buying newsletters and other premium services at TFNN.com. So be sure to check out more details on the homepage of TFNN.com. 877-927-6648. Going to take our first call of the day. Go up north from where I am in Los Angeles to Stockton, California. Talk to Sam, who wants to talk Chihu 360 technology. How you doing, Sam?
Pretty good, Ken. Thanks again for taking my phone call.
What's going on?
I'm looking at it. I remember that I talked to you a couple of times about this thing, and what do you think of risk to reward ratio? And I'm thinking of buying this one still above the buying point, which is 24.54, if I'm not making a mistake.
Yeah, I would put the buy point there right around 24.50, maybe 24.75. Either way, the stock right now is trading at 24.83. I was really optimistic about this stock. I actually bought it and didn't feel like I was chasing it when volume really expanded back on December 3rd. The stock was up $2.45. And then, it basically showed very abnormal price action over the next 2 days on December 4th and December 5th. Basically gave back all of its gains and then some. But like you said, Sam, it is holding above a buying area here. Overall, when a breakout fails in dramatic fashion, like Qihu did, the stock is really going to have to prove itself, again to me. So even though I like its growth prospects, I think it has the look of a leader. I'm really looking more at those two very heavy volume declines on December 4th and December 5th, and that is the reason why I'm kind of staying away from this stock for now. So, okay. Yeah, I'm just going to kind of watch this one for a little while. And, I don't know how much you use technical analysis, but if you look at a weekly chart for Qihu, it's as ugly can be, with that nasty reversal last week in very, very heavy volume. So personally, I think there are better fish to fry out there. Like you said, it is still holding above its buy point, not by much, but it is holding above it. I'm just not a big fan because of the failed breakout.
Now, Ken, is there a possibility because the Security Exchange Commission kind of put it out there, Chinese counterparts for their compliance problem, and because of that, Qihu got a hit also same day? Would you consider that into the chart, or?
Well, it's another layer of uncertainty. I'm not entirely familiar with. In a nutshell, can you tell me what it was in the SEC? What was that again?
Basically, they're saying that a lot of these Chinese companies, including Baidu, they are not in compliance with American ADR, whatever the compliance are. So basically, in anticipation of that, Baidu got hit, and a lot of other Chinese internet stock got hit, including Qihu. And because of that, you see those 2-day volume higher.
Yeah. Well, I mean, it's certainly another layer of uncertainty that you have to throw into the mix here. There's not that much when you look at China companies that list on the U.S. exchanges. There's really not much good going on. I mean, Qihu has been going higher because it's taking market share from Baidu, and Baidu has been under distribution for as far back as you can see. I mean, that one has totally given up its leadership role. So, I mean, the fact that the SEC is saying that some of these China firms aren't compliant. I mean, it's definitely another layer of uncertainty. And plus, this market rally that we're experiencing is still just not. It doesn't feel right to me. It's not like a clear uptrend that we're in here. So. Yeah, I mean that thing it's definitely another layer of uncertainty that you want to pay attention to, and you know what a breakout should look like. For example, you got Salesforce.com breaking out today. That's a heavy volume breakout. I know what that's supposed to look like after the breakout. Now, if it does the same thing that Qihu does and reverses in heavy volume tomorrow and the next day, yeah, it's another factor that's telling me that this market really isn't as healthy as it's trying to convince people that it is.
Okay. I was also considering maybe like a buy it and kind of have a stop loss, just to, if it doesn't break out, then I guess at least I can cut my losses with the stop loss instead of kind of missing out or.
Yeah, I would say that the $23 price level, right where its 50-day moving averages, would be pretty good support there. So if you're chomping at the bit and you want to own it, 23, maybe 22.75 would be a good stop.
All right. Thanks for your 2 cents.
Okay, Sam. Appreciate it. Thanks for the call, as always. All right, headed into break number 2, folks. A big, long segment coming up, about 15, 20 minutes. Plenty of time to give me a call. Ken Shreve with you on Breakout Investing. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Did you see yesterday that Barron's came out with their top 10 stocks for 2013, and they had Apple on the list? It's hard to, people just can't give up on Apple. They think it's just going to be a leader forever and ever and ever. But Apple was on the list. They also had Barnes & Noble, BKS. Let's see how Barnes & Noble is looking here. Kind of a common denominator that I found among a lot of these 2013 best stocks is companies that really aren't growing earnings materially, and that's a problem. I mean, when you're looking for leadership in 2013, you want to look at companies that not only have a good track record of earnings and sales growth, but also companies that are expected to grow earnings going forward. So, Barnes & Noble, reasonable technical picture here. Stock's up 40 cents today to 16.14. Could try for a breakout soon over 17. But, kind of a stock with lukewarm fundamentals, and they're expected to lose 78 cents a share in 2013. They're going to lose 58 cents in fiscal 2014. Another stock on that list was only one healthcare name on the list. I was a little surprised to see that. A lot of healthcare names looking pretty good here into the end of the year. I think many healthcare stocks can do well in 2013. Novartis in a decent technical setup here. It could try to break out over 64 shortly. The thing with Novartis, again, is just very sluggish earnings growth. Earnings this year expected to decline 5% from 2011, and then 2013 they're expected to grow annual earnings by 2%. So really, not much in the way of fundamental powerhouses in this Barron's list, but we'll see. One name that I did agree with, I think the financials could do well in 2013. It's not out of the question that interest rates could, start to rise sooner than some people think, especially if this economy starts to heat up and perhaps GDP growth comes in a little better than expected. But J.P. Morgan Chase has been forming a base for some time now. Basically started to consolidate back in mid-October, showing relative price strength. One of several stocks out there that's just not showing meaningful signs of accumulation yet, but if financials do take the leadership baton in 2013, you could look for a name like J.P. Morgan Chase to possibly outperform. But overall, the Barron's list, not too much that's on my radar. Western Digital was also on the list. BlackRock, another financial, Marathon Petroleum, MPC. So, but healthcare working nicely right now. Celgene, nice breakout yesterday, over $80 a share. It is extending gains, following through nicely, up another 2.3% today to 82.35. We've been talking about Celgene. Their key drug is Revlimid, but they've also had some good clinical data recently on Abraxane, which is used to treat breast cancer, but also could see some indication in pancreatic cancer. So some positive headlines around Celgene. Biogen IDEC, BIIB. As far as I know, I've not heard from the FDA yet on its oral MS treatment, BG12, but Biogen's made a nice move since the market lows in mid-November. It was a $134 stock back then. It is now up to around $154.71, up another 1% today. When you have a strong run off the bottom like this, it is good to see one last shakeout before a stock attempts a breakout. So if Biogen just keeps going, I'm not gonna chase it here. But Biogen is a stock that has a lot of characteristics I like to see. But after such a strong move, would like to see a one last shakeout, preferably in light volume, and price action like that often paves the way for a meaningful breakout. Problem is, some stocks don't have that shakeout, and they just keep going up. So Biogen outperforming nicely today, and have to give credit to Gilead Sciences as well. This one is definitely extended after a gap up in price on November 12th. On that day, Gilead reported a 100% cure rate in a late-stage trial of a new drug it's testing for hepatitis C. So Gilead, probably the strongest performer, although Celgene is right up there too in the biotech space. Think about Gilead too. Investors, they love to buy stories in biotech, and what they do is they buy price performance, but they don't buy fundamentals. And actually, fundamentals at Gilead, pretty decent. A company with excellent top-line growth in recent quarters. Earnings growth has declined a little bit in recent quarters, but still overall a pretty decent fundamental and technical picture for Gilead. But it is extended after a recent breakout over 70, so I'd be careful of chasing it up here. Gilead up another 2.9% today to 76.37. Let's see how Google is doing. It had a nice gain at one point today. And then we'll take a call here. Shares of Google up 1.7% today to 697. Still having problems at its 50-day moving average. All right, let's go to Bill in Colorado Springs. I was just talking about J.P. Morgan, and Bill wants to talk J.P. Morgan. How you doing today, Bill? Bill, are you there, sir? Hello? No, he was there. He dropped. Okay. Well, Bill, I see you there. If you want to call back, I can take your call. But Bill had a question about J.P. Morgan Chase, so maybe we'll hear back from him. All right. Let's see here. Shares of Google. Let's go back to Google. Seeing some resistance at its 50-day moving average. There's a story out there, kind of a rumor, that Google may be interested in revisiting a purchase of Groupon. Shares of Groupon were up big last Friday. And it's holding on to gains from last Friday. It's up another 3.2% today to $4.39. This is kind of a weird rumor because, remember, 2 years ago, Google offered to buy Groupon for $6 billion. Well, now Groupon is worth about half of that. So I guess there's a chance that Google may still see some value in this company, but that doesn't seem like an acquisition that would make a lot of sense for Google unless they see something that the market does not. So anyway, moving on, let's take a look at shares of Equinix, EQIX, working on its fourth straight daily price gain. The daily chart of Equinix was really looking vulnerable last week, but the stock has been in rally mood. And the good thing about Equinix is that its recent price gains have come in some expanding volume. So stock's up another 2% today to 198.06. And still building a base here. Not ready to buy it here. I suppose you could interpret the pattern as a double bottom with maybe a breakout here over 196 thereabouts. But it doesn't. That's kind of a stretch, I think. So maybe Equinix will retest its former high right around 210. But we'll see what happens. But definitely Equinix seeing renewed signs of buying. Still a lot of base building going on in this market. Not seeing some breakouts, but it's not like they're all over the place. CF Industries, another good performer today, up 1.7% to 217.30. Still working on the right side of a base, but to its credit, it did recently climb back above its 50-day moving average, and it has been able to hold above it. Economic data today, we did get a reading from the IBD TIP Economic Optimism Index. Not a good reading, unfortunately. It fell 3.5 points, or 7.2% in December, with a reading of 45.1 versus 48.6 in November. Index readings above 50 indicate optimism, below 50, pessimism. The index has three key components. They were all down in December. The 6-month economic outlook, that's a measure of how consumers feel about the economy's prospects in the next 6 months. That dropped 8.8% to 42.7. Personal financial outlook, a measure of how Americans feel about their own finances in the next 6 months. That fell 7.7% to 51.2. And finally, confidence in federal economic policies. This is a measure of views on how government economic policies are working. That fell 4.6% to 41.5. So not a good reading in consumer confidence from the folks over at Investors Business Daily and Technometrica. Economic data for the rest of this week on Wednesday. Tomorrow, a 2-day Fed meeting concludes. We'll get more color from the Fed on how they think this economy will fare in 2013 and beyond. And Thursday, we have weekly jobless claims. We'll get a look at wholesale inflation with the release of the Producer Price Index. And then Friday, we get the Consumer Price Index. So some kind of back-end loaded week of economic data. IPOs set to price this week, or they're coming up soon. Oil refiner PBF Energy This is going to trade under the ticker symbol PBF. They plan to raise $429 million by offering 16.5 million shares. Price range of 25 to 27. PBF Energy did $20 billion in sales over the last 12 months. So keep an eye out for PBF Energy, oil refiner that's going to trade under the ticker PBF. Paul Boy Frank. And also Solar City. SCTY is going to be the ticker here. Company leases and installs solar energy systems for homes and businesses. Company plans to raise $141 million by offering just over 10 million shares at a price range of 13 to 15. Some talk that the proposed offering price may come down from that 13 to 15 range. Solar City did $124 million in sales over the last 12 months. In earnings news, let's take a look at Dollar General. DG under just a big downward move for DG. The stock is down 7.9% to $42.91. You can look at its price action basically since July. Lower highs, definitely a stock under distribution. Making a big downward move today. Earnings beat the consensus estimate by 3 cents, up 26% to 63 cents a share. Sales were mostly in line, maybe a little disappointing at $3.96 billion. That was up 10% from a year ago. Cautious about the rest of the year. They did say they're spending more on advertising to compete, and anyway, just a lot of sellers in Dollar General. This is a stock that had been under institutional selling for quite some time. Take a look at some of the other dollar retailers out there. Family Dollar stores getting taken apart, down 8.3% today to 64.73, and then DLTR, which would be Dollar Tree, also having a rough day. You can see the repeated resistance for Dollar Tree at the 50-day moving average, down 4.2% today to 37.79. So rough day for the dollar retailers. Goldman Sachs out with a positive note on 4 retailers today. Coors is a name, again, that I would like to own at some point. It does like the growth prospects, but technically just looking very, very shaky here at best. Goldman makes positive comments about the company. Coors is trading near its session low. Still up 2.1% to 50.79, but well off its session high of 51.81. In fact, trading down near its low after early strength. So initial resistance at the 50-day moving average here for Coors. Sometimes, what happens in a consolidation like this is that you'll get this low over here in November. It gets undercut, and then that shakes out the last sellers in the stock, and then the stock basically starts working on the right side of a base. Either way, Coors is not a buy here. It is still working on a possible base, but just nothing in the way of institutional buying that I can see. So Goldman Sachs makes positive comments about Coors not helping the stock. Also, Gap, GPS, this is a stock that's been nailed by selling pressure. Did find support so far at its 200-day moving average. Gap right now up 3% on the day to 31.81. But, again, a stock that has been hit hard by heavy volume selling recently. Doesn't look like volume... not much volume in the stock today, despite this note from Goldman Sachs. Also, Tumi, T-U-M-I. This is kind of upscale luggage. Company came public not that long ago. Same situation as Coors, though. Trading at its low pretty much after early strength. Hits a high of $23 a share. Now trading around $21.79, up 4.1% on the day, but still sellers in this stock. And another example of resistance at the 50-day moving average. The other stock was Tilly's, T-L-Y-S. Interesting call by Goldman with Tilly's. Really thin stock here. Market cap of $380 million and a average daily volume of 150,000 shares. Didn't realize that Goldman followed companies that small. All right, folks, headed into the final break. We'll be right back. Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check in on the markets one more time as we head into the close here. 5 minutes left to go about in Tuesday's session. NASDAQ finding its footing here, now trading in the top half of its trading range. That's good to see. Up 34 points, 1.2% to 3,021. There had been some sellers come into the NASDAQ, I don't know, maybe about 30 minutes ago, but we're back up in the top half of the trading range, so that's good to see. S&P 500, let's see what this one's doing. Similar situation, kind of right in the middle, maybe just a little bit above the middle point of its trading range today. S&P 500 now up 9 points, 0.6% to 1427, and the Dow Jones Industrial Average trading in the middle half of its range here, up close to 74 points, 0.6% gain to 13,243. All right. What else we got going on here? Shares of TripAdvisor having a good day today. TRIP is the ticker here. Look at this wild day of trading. I mean, how does pricing like this happen? I don't get it. Hits a high of 47. Low of 40.64, and it's at 40.95, so pretty much at its session low. Big gap up for TripAdvisor today, up 6.7%. to $40.95. Liberty Media, ticker LINTA. That's headed up by John Malone. Purchased about $300 million in shares of TripAdvisor from billionaire Barry Diller, who actually stepped down as chairman. Liberty is now a majority, or has a majority voting stake in TripAdvisor. Interesting TripAdvisor week yesterday after Deutsche Bank upgraded the stock to buy from hold, so it was a timely upgrade, but the stock really didn't respond that well to the upgrade at all because it traded lower on the news. Deutsche Bank raised its price target to 50 from 37, saying that TripAdvisor will likely attract more ad revenue as competition gets hotter among online travel companies. Let's see what this news with TripAdvisor today is doing to help shares of Priceline. Not doing much. Shares of Priceline down $3.18 after early strength to $622.78, right at a key resistance level here. It's a 50-day moving average at just over $620. So Priceline continues to look weak, and shares of Expedia. Let's see what Expedia is doing. It is up near its session high, up 4.1% today to 60.06. Still respecting its 50-day moving average here, finding support. So let's take a look at Varian Medical Systems. They make medical equipment software mostly used in the field of oncology. Low volume breakout for Varian over 71.39. I just, I'd like the technical setup, but if there's no volume behind a breakout, I'm going to take a pass. Still decent chart here, decent fundamentals as well. And let's take a look at another healthcare name, Sirona Dental Systems. Really like the tight trading after a gap up in price several weeks ago. This one could still work. And Rackspace Hosting really trying to kind of wear investors out here. This is a stock that I expected would have moved today on a seemingly strong day for the NASDAQ, but it's not ready yet. No volume. Shares are down 8 cents to 67.45. Currently working on the handle area of either a cup with handle pattern. You could even call it a double bottom pattern with a handle. You can see the second leg down here undercutting the first leg, rallies back, passes a buy point, and now forming a handle area. So not out of the question that this one could try to break out over 70 in the not too distant future. Coming up next, the Tom O'Brien Show. Always appreciate you listening in to Breakout Investing. I'll be back tomorrow, 3 o'clock Eastern, for another edition. Have a great day, everyone.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today. because your journey to extraordinary rewards is just one click away.